Good morning, traders. Welcome to BCR's daily market analysis. Today, we are looking at major moves across the US dollar index, crude oil, gold, and the Australian dollar, all shaken by escalating US China trade tensions and shifting investor sentiment. Let's dive right in. The US dollar index dropped sharply last week, falling over 3% to a 3 year low of 99.02. This comes as foreign investors retreat from US assets, driven by growing concerns over President Trump's aggressive trade policies. China has retaliated with tariffs on US imports reaching 125%, while the US has ramped tariffs on Chinese goods to a staggering 145%. Despite a 90-day truce, fears of a recession loom large. Technically, momentum remains bearish, with the RSI at 29.65 and all major moving averages pointing downward. If the index breaks below 99.02, we could see further drops to 98.52 or even 98.35. Crude oil is feeling the pressure too, hitting a near 4 year low of $54.78 before rebounding. The prolonged US China trade war is casting a shadow over global demand forecasts, with the EIA cutting its growth outlook for both the global economy and oil consumption. At the same time, OPEC Plus is planning a supply boost, adding to oversupply concerns. Technically, the bearish trend is strong, with a death cross formation confirming pressure. Key support lies at $55.52 and $54.78, while resistance sits at $60 and $63.64. Meanwhile, gold surged to an all-time high of $3245.50 last week. The falling dollar and renewed trade war fears have sent investors flocking to safe haven assets. Despite some hopes for a trade resolution, Trump's unpredictable policies and the Fed's stance on rate cuts continue to support gold's bullish run. Technically, gold is in full rally mode with a classic V-shaped reversal and RSI soaring past 71. Key resistance lies at $3,300 and $3,350, while support holds at $3,175 and $3,100. Finally, the Australian dollar dipped to a 5 year low of 0.5914 but recovered to trade near 0.6300 as the US dollar weakened. Australia's tight trade links with China make it vulnerable to ongoing tariff escalations, with the RBA expected to cut rates in May. The outlook remains mixed. Technically, the pair trades slightly above the 5 week moving average, though momentum is still cautious. By key support, the key support is at 0.6200 and 0.6156, while resistance stands at 0.6306 and 0.6389. Keep an eye on the key levels for this week. Make sure you stay updated with us. Thanks for watching and see you in the next video. Trade safe.